Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by FinLearn Academy. We are right now into the very strong market move. It is almost a seventh week where the market has moved up by almost a 13%, which is a very big move. In a recent upside momentum, we have seen that many global factors or macro factors has played its role. Let's say like a crude oil that has fallen down, US dollar has fallen down, then US yield has also dropped down. So what we are going to do is that we are just trying to understand what they're doing right now, on what we are expecting it to be, or what the technical view is getting formed, and what it has in repercussions on the Nifty. So let's quickly check into it. So here we are seeing a US 10-year bill on the weekly basis. This has declined almost a 21 percentage. It has taken out the very first support level. So first support level was near about by a 3.94 level, and then it has come down to a 3.9 level. And with my technical experience, I respect this support level more than the earlier one. This is what I call as an unobvious support level. Market has means US dollar has come down to this particular level. As of now, no reversal sign that we are seeing, but it is at a support level. We can see that it is in a glass support level because there is no presence of buyer at this particular momentum, but somewhat prices has hovering around support level. And if I take the view on the US dollar as US crude oil, WTI, so it is moving into the falling channel, and it has come to the lower part of it, and it is trading at its in a previous support level. So last couple of times prices has bounced back from the 67 odd level. So this week also prices has dropped down to this particular point. This is almost a 30% correction that we have already seen. Let's measure it. So this is what the peak level that we have seen, and this is what the bottom that we are seeing. So almost 29-30% kind of the fall that we have already witnessed. Yes, means on the high side, 72 to 74 is a resistance band. Once it moves above this particular level, then we can understand that yes, crude oil has formed this bottom, and now the things are trying to pick up its momentum. But this particular scenario is possible once market is moving, or US crude oil is moving above the 74 level. So on whatever the factors market has rallied, means fall in a US yield and crude oil, they are hovering at a support level. They haven't given us a certain kind of the reversal sign, but of course this is the one kind of the caution that we are seeing. Now, being a technical analyst, we always believe that be with the trend. So as far as there is no reversal sign, so we are not concluding that this is what the top and this is what the falling momentum that we are seeing, but based on the factors that has played behind it, and they are at the support level, and if one has joined the party late, then we suggest that they have to move within very tight stop losses. Otherwise, within such a very huge upside momentum, little bit fall can also takes out us from the trade. So it is very essential that especially for those who has joined the party quite late, play with a very tight stop losses. Now, on the Nifty daily chart, we are seeing that earlier we used to have the bases. We have seen that 90,600, 700 was the one base, and then market has come down a little bit, but it took the support level around this level, and then it picked up its momentum. Now, as the market has moved about this particular zone, that is a 21,000 level. So now this becomes a new base now for the market. So as far as in a short term market is about 21,000 to 20,800 level, it will be considered in a bullish territory. Yes, these levels are quite far away from the current level, but the fact is that in a recent upside momentum, market has risen up very lot. Means let's say in a 2 days, it has moved up almost by 400 and 500 points, which is a very big move in a very short time span. So of course, those stop losses will be a little bit deeper as usual as compared to the usuals. RSI is also quite overbought, 85 level around. But again, as far as prices are not showing us a reversal sign, we state we are bullish, but of course we need to exercise a caution because it is an actual bullishness, and the factors, other factors, the contra factors are at a support levels. Now, looking at sectors, here we see that Nifty IT sectors, which we have earlier a positive view on this. So Nifty IT sector has quite did well, and it is expected to do well because it is a very structural story. Means this is what the 10 years kind of more trend line that we have drawn. So this is Nifty IT sector. So this is a one time, two time prices has taken the support level around this level. Then this is what the another internal trend line that we have seen, prices found the base, and then we have seen the breakout about this level. In this 22 days, IT sector was up. This week, IT sector was up by 7%. Yes, and its previous peak is around the 36,300 level. We are very much close to it, but yes, still there is a room. And if intermediate correction happens in IT sector, then it will give us a better risk reward ratio, because IT sector is a laggard move that we are seeing into that. So yes, any intermediate corrections that we are seeing, so one can see the opportunity into the IT sector. And secondly, let's say Infosys is a one chart that I will show you, and I wanted to share it's an historical pattern. So let's say this is a monthly chart. Now pay your attention on the bottoms of the stocks and its corresponding RSI. So this goes since year 2001. So almost more than 20 years history that we are seeing. So whenever on the monthly chart there is a deep correction happened and RSI has turned out to be an oversold on the monthly chart, and then it had a time-wise correction, but slowly, steadily, it has picked up its momentum well. So this is a one time, second, three, four, five, six, seven, and this is what the eighth time that we are seeing. The prices has corrected deeply. It has taken the support at purple color moving average, which is an intermediate moving average. It has formed the base, and now it is started to pick up its momentum. Yes, short term wise, the prices has come up very nicely in a short run. But whatever the intermediate decline happens, so I believe that this will going to give us a better risk reward ratio. So yes, IT sector will be the one place that we are seeing. A second one is a Nifty metal. So in a Nifty metal, after a good period, it is also in a laggard sector, but it has given the breakout. So from past couple of months, where the prices are hitting the resistance near about the 7,000 level. So this particular week or month so far, prices has moved up, and sustainability observed in this. On a weekly chart or daily chart, there is an of course the good run has happened, but this is what the fresh base that has created out 7,500 or this particular level, which includes the short-term moving average slope as well. So above this level, once the prices are moving up, then it gives us a good comfort. FMCG sector has not picked up its momentum, and however, it doesn't have that much kind of a lucrative scenario. But the stock specifically, when I see, I find a conviction in two stocks. One is a ITC. It is followed my favorite pattern that after a good base, when the prices are moving up, retraces a bit, then it is taking a support level at a monthly chart, followed by the breach of tiny trend line. So this is a bullish continuation sign that we can see. Means after the very strong upside momentum, it has retraced, and then now again it is trying to pick up its momentum. So there is a monthly chart a development that we are seeing. On daily chart, what I see is that after the bad trap, so let's say the stock is forming its support level around this level. This was the support, this was support, this support level got breached, but then it got halt at the next best support level, and then now prices have started to pick up its momentum on the high side. It is not moving right now, but the better risk reward ratio in this overstretched market, when we see, then this kinds of the stocks that comes to my mind. So let's say right now it is in 458 level. So if I have to put my stop loss, so ideally once the stock price moves above this level 464, 465 kind of thing, then I can see that this is what whatever the immediate 2 days low that has formed, so that becomes my stop loss. So in this case 450 or 455 can be the case, and the next best upside momentum that we can see is it's this particular level, so 490 level kind of thing. uh, when the market is overstretched, so of course many of the um, defensive sectors can come into the light. So that is what my take on this. Then another stock is a Godrej City. It is also in a bullish structure, not having the momentum, but structure wise it's good. Risk reward ratio perspective, that also I find better in a position. So let's say the stock has given the breakout, it has come down, retraced a bit, and now it is again trying to pick up its momentum on the weekly chart. The stock has come down, it has taken the support level. So one time, two time, three time, four time, where the long time support level has taken up the purple color line support over here, then support level over here. The falling trend line got breached, and this is what the base has also taken out. So it gives me the understanding that okay, the correction happened, pause happened, and now the stock has started to pick up its momentum. On the daily chart, yes, the stock is a little bit struggling here and there, and before it actually takes a momentum, little bit stocks normally sigh for some sorts of short-term volatility that we are seeing. But once prices are breaking out this particular zone, or let's say this particular level, 1050, which is very much nearby to this, then we can understand that there can be a further more traction. So these are the couple of the stocks to share with you, and in a coming week we can have an eye on this particular stock. So whatever the discussion that we did regarding the market sector and stocks, this is for the educational purpose only. Thank you so much.